Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, it looks like bulls have taken complete control of Dalal Street and they are not looking in the mood to let it go.
Well, CJ, this has been a market which has been moving in a narrow range for quite some months now. So just hold your horses. The bears may be just waiting around the corner.
I don't know if they're waiting around the corners, but if they are intending on facing the bulls, it's not looking a very, even fight. That said, what's driving this rally? You have to look at what is happening on the futures and options side. There is a lot of covering happening. Why? Because when the market was down and out for 5 days in a row last week and the early part of this week, a lot of short positions were being added. But yesterday's surprise move, or day before yesterday's surprise move in the US, and then what we saw culminate in our market yesterday, has forced a lot of this short positions to be covered. So that was one factor. Secondly, so far, although earnings have been muted and some of the stock specific reaction has been quite violent, we have not seen very large scale downgrades happening across sectors. So that is something to really look out for. Next, if you look at, one more point that I want to make, what was Nestle's Q1 earnings telling us about the demand scenario? We will comment about the earnings later. I'm sure Santo has a lot to say about that. But if you look at the top line growth and the volume commentary that came out from Nestle, it doesn't seem like the demand situation is as bad as a lot of the analysts were fearing.
Well, CJ, this is now turning out to be a largely bottom-up market. But that said, I must give it to you, Robinhood investors,
Thank you.
Because even veteran brokers are puzzled by the manner in which the market has still managed to hold on despite relentless selling from foreign portfolio investors all this while. But let's see, it's still early days. You mentioned that we've not seen any major downgrade in earnings yet, but I think that is inevitable looking at the way the numbers have come out so far.
Yeah, but one more point about this bounce back is that, of course, you can have doubts whether this will sustain or not, because after 6 days or 5 days of fall, it is very natural sometimes you to have a technical bounce back. But today is the second day of almost greater than 1% gain on the benchmark indices, and if you look at the F&O data that is coming out right now, you are seeing a lot of long positions being added. I mean, the open interest on Nifty futures of the April series basically was higher by 11% right now. That is showing that traders are also now turning their colors and now shifting towards the bullish side instead of the bearish side.
Traders blow with the wind, so I think tomorrow you'll have them on the other side very quickly. That said, let's take a quick look at some of the stocks that were in the limelight today. Start with RBL Bank. The stock made a big move intraday, was up by close to about 6% at one point in time, but then gave up most of the moves towards the end of the day.
Not surprised there.
Now this is what MC Pro team calls a pro-cyclical stock, which means that these stocks tend to do very well when the cycle is up. The performance of the stock gets magnified depending upon the cycle. And now,
so you are saying that when the economy does well, RBL Bank should do well.
The stock when the market does well, economy does well, the stock will do disproportionately well, and likewise on the downside. So right now, what the bank is trying to do is trying to diversify its loan book and also its deposit base, and the stock had touched a 52-week low just recently. There's some bargain buying at these levels, so maybe some of the investors are betting that the bank will be successful in its efforts.
I'll tell you why the stock recently hit a 52-week low. See, banks in general have been, a divided section, a divided topic for the market, but RBL Bank within the banking pack has been one of the biggest underperformers, and the reason being that the confidence is quite low on the stock, on the management. The lender was caught in two big, bad loan crises that we have seen in the past. The corporate the real estate sector bad loan, cycle that happened, plus the recent bad loan cycle that we have seen in microfinance segment during the pandemic because of lockdowns and whatnot. So that is probably one of the reasons why the stock has not been an outperformer within the banking pack. And lastly, unlike the bigger peers, this bank has to pay a lot more to get deposits. So that is something that also works against it, in my opinion.
So this is what it's trying to rectify.
Oh, we'll see whether it can rectify or not. That said, Jubilant Foods, okay. It was buzzing in trade today, and what was driving the stock really? Well, one of the first things that was driving it were price hikes that the company has taken. Recently, Domino's has likely taken about 5 to around 7% or price hikes in product prices such as pizzas and whatnot. Largely, this is to protect their margins because input prices have risen. We have seen soft commodity like wheat, other food items rise because of the Russia-Ukraine crisis. So that is something that is at least giving confidence to the street that the management is trying to protect margin. And also, what it also tells you is that demand is strong enough for the management to pass on these higher input costs to the customers. Lastly, technically also, if you look at Jubilant Food, the setup is looking quite bullish if you, according to the indicators that are tracked by Moneycontrol Pro. And on the F&O side, we are seeing a lot of long positions being built up. So from a short-term perspective, the stock is looking quite healthy.
Well, at the same time, CJ, the company has gone in for a split store strategy, which means that opening more stores within short distance of each other. Now, the success of the strategy is yet to be seen. There are fears that this will actually cannibalize the existing stores without really adding to the overall numbers. That's one thing. Also, the company is in the midst of a management transition, so that is also likely to weigh down sentiment for the stock.
But that sentiment hit has also been taken care of in a way, because if you look at when Mr. Porter announced his resignation from the company, the stock of course cratered. It fell more than 10-15% at that point of time. It has recovered all of those gains within 3 weeks. So I don't know if that is that much of an overhang.
Well, certain things take time to play out, CJ. You need to be a little more patient. And lastly, inflation, that's a big problem for all consumer companies. And while Jubilant has been able to take a few price hikes, it remains to be seen how much of it will be actually be able to pass on to customers beyond a point.
Going by the current evidence, it seems it can.
Yes, I know. You're given your fondness for pizzas and other stuff.
Nestle India.
Well, Nestle India, that was the big numbers of the day. The company's operating profits actually is under a bit of pressure at this point in time, and is fallen slightly short of estimates. And like other consumer companies, Nestle too is feeling the pinch of rising costs, and it remains to be seen how much of it will be actually able to
the management was out there blaming 10-year high inflation prices for the the muted performance in the quarter. But I would not be so disheartened by Nestle's performance. See, cost pressures are there, but at this point of time, nobody has the visibility on how long this is going to last. This could be a 1-quarter thing, this could be a 2-quarter thing, but where visibility is emerging for a company like Nestle is that at least the demand side is doing well, as I mentioned earlier, and market has taken heart from that. The demand outlook looks better given the sort of top line performance the company came out with. 10% growth in revenues on a year-on-year basis. Even some of the key products, like we know Maggi noodles, Kit Kat, Munch and all, they all saw about double-digit volume growth in the March quarter.
That's why, because they're in the premium portfolio tends to do well. So that kind of masks the overall.
Yeah, so that is anyway that is the major source of their revenue. So if it is doing well, then that is a good sign for the longer term prospects of the company. That said, next up is IndiaMART Intermesh. Okay, I know internet platform companies are no longer the flavor of the market as they used to be probably 7 to 8 months ago. The stock is down 50% from its highs recently, but it seems that a little bit of optimism is coming back on the counter. Now, what is driving this optimism? Inorganic investments. So IndiaMART basically raised a lot of capital last year, with the intention that it will probably invest in some of the inorganic growth opportunities. Some of those opportunities is now basically making the street optimistic because it could possibly contribute to the overall valuation of the company, just like we have seen the story play out in InfoEdge very famously, but also add to the top line growth of the company going ahead.
Well, for one, the company seems to be making too many acquisitions, and as you said, some of them seem to be playing off. I think it's rather not some but one. I think it's investment in Vyapar that is paying off right now.
Absolutely, it is.
Which has suddenly made the entire market very hopeful. But at the same time, don't forget the fact that it's been paying some outrageous prices for some of those acquisitions. And when sentiment overall changes, I think this is where people are once again will start to question those acquisitions.
Well, sentiment has already changed a lot for IndiaMART. I mean, if the stock is down 50%, how much more sentiment can change? Possibly the change in sentiment right now seems more durable because investors are finally realizing that some of the prices that they paid may seem pricey from a very near-term perspective, But if you have a very long growth runway, then maybe that price will pay itself out and in bountiful.
Well,
so that is the play out there on IndiaMART Intermesh. Lastly, Shiva Cement. So this stock was buzzing very much on trade. It was higher by 6%. Now it is a subsidiary of or part of the JSW Group, as a cement part of the cement business of the JSW Group. Interestingly, news reports came out earlier today suggesting that JSW is on the hunt to acquire Wholesome's India business. Now, you will remember, Santo, we were talking about earlier in this week how Wholesome India is looking to get out of its non-core assets and get out of the India cement business. Their cement business is largely through ACC and Ambuja Cements. So now JSW has emerged as a front runner with a private equity partner in the deal to acquire these two businesses. And if they do that, Shiva Cement is the only way that investors can play it, given that it's the only listed exposure they have to JSW's the group's cement business right now.
So are the reports saying that the acquisition will be done through Shiva Cement?
That we are not sure. It is very likely that the acquisition could be done through JSW Cement, which is, if you see it, is the parent company of Shiva Cement. So JSW Cement, which is the unlisted entity at this moment, could be the main outlet for acquisition. But Shiva Cement could see some what do you call it, trickle down benefits.
Rub-off effect is more like it. But see, CJ, the point is that from whatever reports I've read so far, it doesn't seem like Wholesome is in a hurry to, or rather this doesn't seem like a distress sale. So when it is not a distress sale, it means that you won't exactly be getting the assets cheap. And typically, when you go in for an acquisition closer towards the peak of the cycle, which is what it looks like for the cement cycle, you might end up overpaying, which then can be a drag for a very long time. So that is something you need to be very careful about.
See, there are two things to keep in mind right now. Cement space anyway has been looked at very positively by investors. Now, what is the primary reason for that? The hope that the capex cycle in the country, especially the private investment cycle, will revive in the coming 6 to another 12 months. The government also, secondly, government itself is focusing a lot on infrastructure spending. So overall, the demand scenario for cement in India is quite good. We are going to see volume expansion as well as capacity expansion. And if this is not the best time to get into this space, given that JSW is trying to expand its footprint in the cement space, then I don't know when it will be.
Well, as for the point about private capex, this chatter has been doing the round for almost 7 years now, and and every time the revival seems to be 18 to 24 months away. So well, I think yeah, of course we can wait and then see if it happens.
I think this time it will definitely play out, or that is the hope.
So CJ, what is it that I have missed?
You're going to you run the show, Santo. It's okay. It's okay. I know you don't want me here.
Okay, CJ. So what is it that probably I and the market
have
missed?
So this is what in this segment, in case you missed it, I have something very interesting, and I am pretty sure it's going to entertain you as well. So generally, when we look at volcanoes, what we think about lavas and earthquakes, right?
Destruction.
But can a volcano tell you about what where the world's economic activity is?
Well, I remember this octopus Paul, trying to predict, which team would win. This was, I think,
he was
2006.
Pretty accurate, yeah.
He was pretty accurate, yeah. So I've heard some crazy stuff like that. So you can go ahead.
So this is even crazier. Okay, so there is an observatory on a volcano known as Mauna Loa, if I'm getting the pronunciation right, and that observatory recently has observed a dramatic fall in carbon emission worldwide. Okay, so that so a little background: the volcano observatory is the best place on Earth right now to observe carbon emission levels in the atmosphere, right? So they have observed a dramatic fall in carbon emission. Now, why carbon emission is important? Carbon emission is a sign that economic activity is rising. When you are seeing an increase in carbon emission, that means a lot more fossil fuel has been burned, a lot more energy has been spent, a lot more economic activity is happening. If carbon emissions are falling, that is a telltale sign that economic activity is declining or is in a downtrend. Now, why is this economic activity in a downtrend according to this observatory? Well, because of what is happening with Russia and Ukraine and what is happening in China. The crisis that has unfolded with Russia's invasion of Ukraine has led to a lot of supply disruption all across the world, especially in the energy market, with EU, a lot of the EU members or European Union members either boycotting or reducing their purchase of natural gas and crude oil from Russia. Secondly, the prevalence of lockdowns in China, that is now extending the pandemic recession that we have seen across the world. So these are two factors which are driving carbon emissions lower and are already providing signs that economic activity is shrinking, and we were not even like 1 year into the recovery cycle.
So that means you should be a little tempered in your expectations as far as the stock market goes, right? So,
yeah.
So
well, this is global activity, not Indian activity.
Well,
maybe
it does eventually
India,
trickle down to India.
As the former finance minister Arun Jaitley,
caught you there.
Maybe you would have, you may have, but as the famous, as the former finance minister famously said, India is always an oasis of hope in the soul. So I'm pretty sure that it will always stay that way.
Yeah.
That said, what are you going to be looking at when we return for trade tomorrow morning?
Well, HCL Tech's fourth quarter earnings will be the focus of attention, because
it's going to come out shortly, no?
Yes, yeah. So that will have a major bearing once again on technology stocks. Infosys numbers, and also then followed by Mindtree and L&T, Infotech. All these numbers were just about either in line with market expectations or even lower, and that soured the sentiment for the tech sector in general. So we'll have to see what kind of guidance HCL Tech gives, because margin pressure is something which is now almost a given right now, and overall commentary from most of these companies too have been positive. But
I don't know why I'm getting a feeling that HCL Tech is going to surprise everybody.
Really?
Yeah, and that too on the positive side. I'm just getting there's so much negativity around IT stocks and IT companies right now, that it's just that that law of averages might just play out here, and you might see HCL Tech coming out with a bumper outlook and a bumper earnings. Who knows?
Who knows? What are you tracking, CJ?
So Federal Reserve. I mean, I am always obsessed with what is happening with Federal Reserve, and Federal Reserve's Chairman Jerome Powell will be speaking later tonight at an IMF event. It will be crucial to see what Powell has to say, given a lot of his colleagues in the rate setting panel of the Federal Reserve have been hinting at even greater rate hikes. Some have now started talking about a 75 basis point rate hike just in the next meeting itself, and they want to get the overall interest rates in the US economy to around 2.25%. Right now it's sitting around 0.25 to 0.5% level. So yeah, you can just gauge from that how important it could be. Whether Powell will support that stance of his colleagues or not will be a very big thing that the market will be tracking for tomorrow.
Sometimes that's what central bankers try to do. They try to talk up the markets or talk it down. So if people get scared into selling stocks, probably the half the work of the Fed is done then.
Possibly. I'm looking at my money control app, and Santo, the market is looking amazing. The Nifty 50 is up 1.5%. Nifty Bank is up 1.4%. Nifty Mid Cap 100 is up 1.1%. And who are the gainers that are leading this market? Eicher Motors, Coal India, M&M, a lot of the automobile stocks are in fact leaders. Asian Paints, HDFC is up today. I mean, so you can just imagine the dramatic turn in sentiment that we have just seen today.
Short covering of positions.
Possibly. But the most important thing for this rally, sustenance of this rally, is what RIL is doing. RIL is the heaviest, stock on the index, and for the third consecutive day today, it's higher by around 2%. It's sitting at record highs. So if RIL continues to do this in getting into the earning week, we will possibly see RIL announcing its earnings next week. This could be a good sign for the market overall.
And for people who invest in index funds.
Yes, absolutely. That said, we should let you get back to your trading terminals and carry on with your day, and we will catch you live at 9 a.m. tomorrow morning.
See you then, and have a nice day.
Yes, thank you.